Hey brother, how you doing? Hope you're having a beautiful weekend. Good man, good. This long weekend felt like a little vacation, not gonna lie. The gap on Nasdaq. Oh, it gapped up a little bit, I guess. It gapped up a little bit. We're it's some very strange weekly consolidation here, especially like considering like comparing to ES and YM, because they're about to like rally, or they want to rally rather, unless Nasdaq allows them to do so though. But anyways, let's take a look at what's going on. Good evening, JGM. Welcome back. On 1 minute, let's see. Wow, that's a large gap. That is a very large gap. Let's see. 40 points. Wow. I guess this week is gonna be the NWOG week. I'll be definitely looking at turning on my indicator for NWOG. I mean, that's also normal though, because this is the new monthly candle, I believe. Yeah, it's a new monthly candle. But anyways, let's take a look at it. It's a strange looking chart on weekly. Because ES literally don't have buy side at the moment. Kind of like gapped up above it. 322.25. Yeah, like two ticks short. It's probably around the high overnight. Go down a daily though. I need more candlesticks to make a plan. All right. So last week, both assets raid the buy side here. Nasdaq rejected, so we traded into the fair value gap on the daily chart, but like it did not show any significant reaction from it. Whether that would be to the downside, to the upside, like either or, it just like kind of consolidated and wicked both sides. Um, which makes me thinking like because it's respecting the CE of this fair value gap, it might want to run the highs because it didn't even like touch a close with the bodies or whatever. It just wicked and stayed above it fairly strongly actually. Whereas ES, it's the same deal on ES. So that fair value gap was traded into here, and the CE of that gap is being respected. Here you can see it better actually. So technically speaking, if this wants to rally right now, I think on ES it seems cleaner. The candles from last week, from Friday to Tuesday, so these down close candles will act as an order block going into this week. So I would definitely be looking at this specific level, maybe like touch there and rally higher, react from it, kind of deal. Whereas like when I'm looking at Nasdaq though, it's really like 50-50. So what I see is it might rally, yes, but there is also a potential bearish SMT divergence. It can technically form a bearish SMT divergence from this rejection block here. It might reject that level as well. So I really want to see overnight price action like before having a bias right now. So I'll definitely be open-minded going into the sessions this week, at least tomorrow, in terms of directional bias, because I can see this rejecting from there, going lower, or I can see this running the buy size and going all-time highs following ES as well. So interesting thing before I go down to the lower time frames. So I was looking at QQs and SPY earlier today on the daily. What I've noticed was, so comparing to Nasdaq and ES, the SMT divergence is much bigger here, right there. I mean, depends on how it opens, but this might be the divergence we've been waiting for, the higher time frame distribution or higher time frame sell model, specifically on the daily. But we'll see because I got to see the open of these assets tomorrow. But here, like when it rated the downside, when it rated the sell side here, it actually turtle souped it on Qs, whereas Nasdaq technically can close below that level, but it followed Qs. So, which is why I was referring to Qs and SPY in the first place today. But anyways, let's go back to our baby girl. I want to look at Dow Jones as well. Let me see Nasdaq here. YM. Rather. Pretty interesting levels that we are at right now. I can see this curling up and rallying buy side, as well as rejecting here, trade below the new week opening gap, act as a support and going for the lows. I can see both. However, there's also just a note of the breaker block here, which was respected fairly on Nasdaq. Then here on YM, there's this breaker block also respected. Fair value gap CE being respected as well. On ES, let's see if there's a breaker there. There's no breaker on ES so far. So be mindful of the daily order block on ES. That's going to be the major level in my opinion for this week specifically. Anyways, let's go down to lower time frames. See what's going on there. That gap is massive. All right. Well, I mean, this definitely seems like buy model on ES, which is just completed actually. So here's the SMT divergence, which makes this whole consolidation on the 4-hour a smart money reversal. So here's the SMT the lows. This is the lower low on Nasdaq, and it just rated the buy side. And if this wants to continue in terms of like its 4-hourly distribution to the upside, I would definitely look for the last manipulation standard deviation projections. And I would try to trade off those levels because essentially this is all-time highs for ES. On Nasdaq though, it has yet to complete it. It's definitely much weaker, and I really don't know if it's gonna follow ES or not. I have no clue. But looking at the reaction from the fair value gaps on daily, 4-hourly, it might want to catch up because it could not trade below the CE of the fair value gap, which indicates strength at the end of the day. And you can see it better, like it reacted strongly from the CE, nobody closed below it. So that is a strong sign for this asset that it wants to buy side. So initially, the order flow was technically clean a little bit. So there's 3 drive pattern here as well to the downside. So this is the first low, second low, and third time it's swept. And then we had that rally on Thursday, I believe, not Wednesday. After that, so we'll see how it goes. But in the event of Nasdaq wanting to rally the buy sides here, what I would personally do is I would be looking at this order block here, which will be the most significant PD area here, because essentially this is the first leg of the market maker model. right? So this is the consolidation. Now it broke out from there. Here's the consolidation. Let me just annotate it better. Smooth edges all the way down to the low. Here, SMT divergence right there in between these lows. I'm sorry, here to these lows. Now it broke out. So any pullback should be a 4 hourly retracement, unless it loses the end walk. So that's the important part. Let me turn on the end walk here. Oh, let me make that a bit cleaner. Um, Come on. Okay. So the idea is right now, because there's end walk and we are trading above it, in the event of price losing that level, it is supposed to act like a resistance. If it trades below it, the idea of running the buy side is gone. So the buy model is incomplete on NASDAQ and completed on ES. That creates an SMT divergence. If it trades below, I'll have more confidence in the short side and the sell side. But as long as it stays above, I would be looking at the buy side more. So, like I said in the first place of this session, I will definitely be looking at this end walk quite a lot this week because I think it's going to be defining for both assets. And in terms of like the model, if it wants to rally again, the same manipulation leg, the last manipulation leg, and its standard deviations would be very insightful for the buy model. Let's go down to lower time frame here. All right. This was my main framework last week. So the idea was either hourly pullback into range equilibrium. Oops. So original consolidation to smart money reversal. So the idea from yet last week was, let me make the annotations real quick. So this is the original consolidation. This is the smart money reversal. That accumulation. So idea was either pull back into range equilibrium or reverse completely and take out the original consolidation. And so far what we have is, because of the Wednesday's price action, this kind of looks like a pullback so far. However, if it really wants to, if it really doesn't want to go to the downside, what has to happen for NASDAQ is taking out this consolidation. Because if it fails to do so, that means it can't even complete the 15-minute buy model here, which creates that SMT divergence for the sell side. The order block is violated also, so it should really take out this consolidation here, which is the 15-minute buy model. So I don't know who I was talking to when I mentioned this 15-minute buy model on NASDAQ. I said something like, it kind of looks like we are about to enter the second stage of reaccumulation on, like, for the 15-minute buy model. So here was the idea about that. Okay. So this is the original consolidation for ES. This is for NASDAQ, and then here, this consolidation is essentially the smart money reversal. Um, Hold on, trying to understand ES. Chop is nasty. Okay, here making lower lows. I would say right there. So this consolidation, smart money reversal. ES really rallied, completed the model, whereas NASDAQ is still trying to reach there. So the idea is, on Wednesday we had that breakout, right? Then I mentioned this breaker block here because what happened here is the first stage. So I consider this chop as the first stage, and any candle in between, like Asia session, London session, and Thursday, is the time decay. That's how I see it. Um, and there's the BPR. So this is kind of like, I would say, power shot, because the framework of the model is, so here it traded into the equilibrium of the range, right? And traded one more time. So that one more time, below, I mean, from the breaker, from here to there, I consider that the first stage of the buy model. So first stage accumulation. And then, because it was way too choppy, you could expect a deeper pullback for the second stage. And I think that's what we got before close. So it just retraced down deeper. So for that retracement, you got to look at the first stage dealing range, right? Because look, it's choppy, quote unquote catfish, second stage accumulation, right? Traded into the equilibrium, and the PD arrays, you have a breaker, you have a fair value gap, and then now it rallied, it gapped up. So, but looking at what's doing it right now, I think it's not going to reverse before completing this buy model. It should be one-sided, probably overnight. It's just gonna rally, and after that, I don't know what's gonna happen. I gotta look at the overnight price action for New York. It's a clean buy model though. Besides the fact that it chopped very hardcore on Thursday, so it literally acted like a holiday or like half day, you know. Sometimes market closes early, right? And it literally looks like that kind of day. Hi guys. Sorry I didn't look at the chat for a second. All right. For the game plan though, what I would do is, I mean, we're not gonna trade Sunday price action, but I'm gonna annotate it real quick. So this is the breaker, right? So this is the breaker, reacted from there, rallied into range equilibrium one more time during New York session. So that's the first stage. Deep retracement, because this is a choppy price action, right? This is like kind of inducing shorts. So from there, it reacted, rallying higher. There's an order block here, just failed. So I would definitely think that it should support the price to the upside here, something like this overnight. Let me take a screenshot of this so we can post it in the channel. All right. Let's go down to. Oh, before going down, I want to see how this aligns with the hourly. As long because it might still want to target the sell side. So what I would do personally is I would look at how 15-minute time frame is reacting above the original consolidation. If it starts consolidating above that level, I would expect probably reversal, because there's going to be a bearish SMT divergence on the higher time frame, on the 4 hourly to be specific, and the fact that it's completing a lower time frame model is becoming as a higher time frame pullback. So it's actually trading into this order block right here and the CE of that fair value gap. So here, the CE of that fair value gap. So I would look for a reaction from those levels. So I want to see, like, if it's a continuation after the original consolidation here, it's not going to react to any of these PD arrays. However, if it starts stalling after the original consolidation, so maybe a consolidation above that buy model, that might set the stage for a potential reversal. So that is there for us to observe before doing anything, essentially. Okay, let's take a look at crude oil. Do you guys have any questions or remarks, or maybe if you want to share your thoughts, feel free to do so. We can brainstorm as well before I jump onto another asset because I'm about to jump to crude oil. So far, though, um, here's the most important thing for me personally. I would stay on the 15-minute time frame specifically until it completes this model. So now as that completes this model, then and only then I would maybe switch to another time frame. But the main framework is this so far. And if it loses the NWOG, it could say bye bye to buy side. It's probably not gonna do that, but we'll see. April is generally bullish. Honestly, I don't believe seasonal tendencies, but maybe. Personally, I think it's bullshit, but crypto NFP next week. Yeah, I think Friday's NFP because it's the first week of the first Friday of the month. Should be NFP. Non-farm employment change. Wait, hold on. Is it next week? Oh yeah, it's this week. Okay, yeah. April 4, April 5. Wait, it should say non-farm payroll though. I don't know. So what we have to this week is we have PMI at 10 o'clock tomorrow. Another 10 o'clock news on Tuesday. Wow, this is all 10 o'clock. PMI. And okay, that's it. So I guess this week is gonna be silver bullet that week. I can feel that. We haven't had silver bullet days for a while. I miss it, low key. All right. Again, I'm gonna mention this one more time because, in my opinion, it's very important. First things first. Personally, I'm gonna stay on the 15-minute time frame for my main framework because the buy model is there at the moment. So until it completes, I'm gonna stay on the 15. And um, before it takes outdoors of consolidation, if it trades below the NWOG, new week opening gap, that is a significant sentiment change, just so you guys know. So every buy side idea would be invalidated if it trades below it, essentially. Keep that in mind. I think keep NWOG this week on your charts. Okay, crude oil. Let's skip to that. Holy moly jolie, this looks so good. This looks very, very good. Okay, I'm gonna go down to 4 hour just because it's the model right there. This looks textbook, man. I mean, too choppy here, but overall, I'm gonna delete these. Overall, it's pretty textbook. Like you can see the whole framework in one chart. Like south side of the curve, the reversal here, probably a higher time frame reversal, and rally. And for the reversal on crude oil, you can look at UK oil is the ticker. So as far as I remember, this was the SMT divergence on in between assets. Either this one or somewhere here. I'm not sure which one. And then it rallied. So this whole chop was because of the weekly gap. Once it rebalanced it fully, it rallied. Now for me, it looks like it's in the second stage reaccumulation on the 4 hourly chart. So it should be really one-sided delivery. Zoom in to there a little bit. So I was expecting this to be a turtle soup, but it failed to do so last week. And the main reason for that is because essentially the first stage delivery here, I'm gonna just answer it better. Oh. So essentially this is the first stage, right? And first stage was one-sided already. Because of that, you can expect the second stage to be even more powerful, so you don't have to see a deep retracement. So in this case, you got to look at the market maker model dealing range, right? Instead of the first stage leg. So you got to imply the dealing range and look at its EQ or the discount since it's bullish. So what happened here was it retraced down into, so this is the order block, right? This is the last order block. It should not fail. Didn't fail. In fact, reacted at its extreme there, the open price, and rallied from there. So for me, the confirmation is, so this is essentially another order block. It failed, right? Camel closed above. Now it's bullish. So that's the sentiment change. I mean, comparing to Nasdaq or ES, like indices, this looks like choppier or like more manipulative. It's because it is actually more manipulative. It's highly news driven asset. But overall, as long as it stays above this order block, so as long as it does not violate this low right there, it is programmed to be drawn to 85.41. Maybe I should start trading crude oil more often, I guess. Hold on. I wonder if I can turn on the price. Okay, perfect. Did it work? It did not work. Whatever. I'm gonna just take screenshot of this. Dude, why are you eating here? Can you eat inside? Yes. Why are you eating here? Can you eat inside? So everyone can hear your. Alright, let me see. Do you ever use RB1 gas as correlated pair for oil? No, I do not. But what you can do is, so let me pull up RB. So what you can do is though, you can correlate this asset with, I believe it's, I don't remember the ticker, natural gas or something. Natural gas futures. So I would look for a correlation in between these assets rather. Let me see. Or not, I'm not sure actually. It looks like it's inversely correlated. So I mean, I don't know. I'm not trading commodities, but when it comes to oil though, I know for a fact that you can actually look for correlations in between US oil and UK oil. They act like the same way as Nasdaq and ES. And for also metals, what you can do is if you're trading like gold, let me pull up gold futures actually. I don't remember. I don't even know. Oh, GC. So for gold, for example, you can correlate this with silver futures. Oh, well, ticker. What's the silver futures ticker? I don't know. I remember. Uh, Futures. SI. Okay. So here, if you're trading this asset class, you can definitely do so. Here, for example, there's S&T divergence. Gold is making lower lows, silver making higher low, and then gold rallied, obviously, because silver is the weaker pair. But personally, I don't like to trade either or because, like, first of all, they're highly manipulative assets. Just like crude oil, it's highly news driven. And if you look at so this is the weekly chart, and the weekly chart itself is in range bound for years. Same thing on silver, because here's the range. So you have the last pullback, last manipulation. Essentially, this is the order block, and then expands higher, the higher high here. It's the range high or expansion high, and same deal on gold. So it's been in that range for almost like 1,030, 300 days, which is insane. For me, that's untradeable. I mean, it is tradable, obviously, but like I don't like to trade this kind of market, this kind of price action. I'm not used to it. I'm not, bro. I don't trade any of the metals or commodities even. Like I looked at KC coffee futures. Um, what's the other one? Orange juice. Yeah, orange juice. I don't even remember the tickers. Uh, frozen concentrate orange juice futures. I think OJ. Like for me, it's just pointless to trade these things because they're gonna fluctuate a lot, and there is a lot of like supply and demand when it comes to trading commodities at the end of the day. Like literally, like fundamental supply and demand. I'm talking about, you know. Um, and I don't like it. I would rather have 100% algorithmic. I mean, not 100%, but 95% algorithmic delivered asset class, which is indices at the end of the day, or stocks. Anyways, let me look at shit. I'm not gonna go through stocks this week because it's literally the same right now. But if you have any like recommendations or like chart requests, do let me know. I can take a look at it. Just gonna skip to or jump to Bitcoin and Ethereum, see what they're doing. So yeah, I mean the game plan on this asset class is essentially I want to see this kind of consolidation here on Ethereum. I don't know how long it's gonna be, but after that consolidation, then and only then, I think crypto, at least like Bitcoin or Ethereum, will be better buy, in my opinion. So I'm thinking consolidation, then manipulation lower into these fair value gaps, right here somewhere, and rally. And Bitcoin will follow that, and if it does so, I think it's going to be probably retraced down into 56, 57,000 dollars, and that would be a very good buy in my opinion. But so far, let me call it daily. Seems like there's maybe 4 hourly buy model here, and if Ethereum can't catch up with ES here, might just create an S&P divergence for a deeper pullback or a consolidation. Let me go on the 4 hourly though. I want to see that buy model. Yeah, it's in fact on the 4 hour. Let's see. I don't see the. Oh, okay. So here, the rejection block on Bitcoin got rejected, whereas Ethereum rallied below it, right? So this is essentially an SMT divergence between these currency pairs. Um, so this smooth edge right there, the bodies, to down here, is essentially the original, the smart money reversal. It just broke out of there. So I think so. This is the smart money reversal or original consolidation. I think Bitcoin is drawn to there right now. So I would definitely look for the equilibrium of this range, maybe like manipulation and rally. I mean, it doesn't have to trade into this equilibrium of the range actually. By just looking at the reaction from this fair value gap CE, it might just rally. For me, what I would use for the second stage reaccumulation here, so there's this order block, down close candle. I would look for that one for a potential rally. It already tested that level here. It might just rally. So it seems like if you're scalping, this could be a great scalp, in my opinion, with like 10x leverage or something. Because here's the idea. If I was to trade this, what I would do is, so here's the entry on this time frame specifically. This is the order block, so it should not fail because of that. The stop loss below that low is the safe low. Something like this would be a great trade. But be careful because you want to monitor Ethereum once Bitcoin trades above this buy side. Because usually that's how reversals set up at the end of the day, right? One asset completes the model, the other fails to do so, then they consolidate a little bit just to reverse back. Who trades these assets? I mean, commodity market was a thing before, I believe, like 2008, I would say. There are still traders who are trading, but mainly, as far as I know, mainly baby boomers. In my opinion, we're going all-time highs again for crypto or indices. Indices can do anything, honestly. Like, I can see them running the all-time highs right now, and I can see them reversing as well. So, because of that, like, I can't confidently say this is my bias, you guys, because like it's been a while actually that I had a clear higher time frame bias on indices, oh, cause like this is a very long consolidation above the original consolidation on the higher time frame. It doesn't give me any clear directional bias on the higher time. So in these conditions, what you need to focus on is intraday trading, essentially 5 minute buy models, 5 minute market maker models, or 1 minute market maker models, and be content with that. But here comes the problem. The problem is psychological at these, like for this kind of price action. Why? Because you're not gonna have a bias going into New York session, and that sometimes fucks with your brain, psychologically speaking. Because of that, you gotta be, trading. You gotta be open-minded first of all. You gotta trade the charts or the the model, whatever the model you're following, and you gotta stay on the lower time frame and be content with less. Would you teach us the basics of options trading one day? Do we need big capital for it, or even with $100 option contracts can have 20x leverage, for example? Okay, it's actually so great. I'm so great that you brought up options trading because I have a class. I'm going to have a class in the VIP group in the future about options trading specifically. It's in the curriculum. I'm not sure which week I'm going to do that, but it is there. I already have the content. So I'll be teaching that for sure. But when it comes to capital, that's the hard part because it really depends on the trading style you want to have. So first of all, if you're going to be swing trading, $100 is definitely not enough. I can tell you that. If you want to just scalp, it might be enough, but you're not going to have a proper risk management. You'll be basically risking 100% per trade initially until you build that capital, you know? So for me, the smallest account you should have for options trading, if you are day trading or scalping, is I would say $500, honestly. And it really depends on what asset you're trading also. So if you're trading, SPY or Qs, which is essentially Nasdaq and ES, it requires less capital, yes. But if you're trading stock options, let's say if you're trading Nvidia or Amazon, or they all have different premiums. So one stock will cost you more, whereas the other one will cost you less, if that makes sense. There are a lot of parameters when it comes to options trading because like there's Greeks, theta, gamma, premiums, and all that bullshit. Um, so it really depends on your trading style and what you want to trade. I would love a silver bullet. I was actually thinking about silver bullet class um, 2 weeks ago, but then I was like, you know what? I wanted to combine it with the market maker model's first class. But then I was like, you know what? I'm going to take out the silver bullet class from this presentation, this class, because the content was already too dense. Because I don't want to rush anything, guys. Like, I don't want to rush you also because you've got to like digest everything when it comes to especially market maker model. It's a complicated model at the end of the day. Yeah, visually it looks simple, but in reality, it's not. Nothing is simple in this financial markets. But yes, I have it in the curriculum for sure. So, but by the way, do tell me, bro. Do you trade? What do you trade? I know you trade crypto, but do you also look at like forex or indices like us? What do you do? Yeah, silver. I have a lot of demand because I mean, technically I'm a silver bullet trader. That's my forte, so to speak. Um, and I know for a fact that like there are a couple people in here signed up for the group just for silver bullet. I'm aware of that. So I'm on the same page with you. You guys will definitely have silver bullet class, 100%. Speaking of which, tomorrow's class, it's gonna be. I might need to reschedule it to Tuesday because I might need to go to DMV tomorrow. Unfortunately, that's not for sure yet, but I'll make the announcement once it's locked and clear. But tomorrow's class will be about more psychological rather than technical stuff. It's going to be about risk management. Um, it's going to be fun. No, I know you, Keela. I was asking crypto for I don't know how to spell your name properly, pronounce your name properly. Farez, I would say, or Fariz, or neither. Actually, after COVID, they kind of fixed the DMV lines. It's much faster now. I can't get an appointment unfortunately because they give appointments 3 weeks out. So Fariz. So I'm gonna post these charts on the channel for the people who could not join the call here. All right. In the meantime, I'm reading the chat. Uh, Fariz. I made up Fariz just to be discreet, and the name is it's Z Sound Core. I agree. Z Sound sounds very cool. How's your father, by the way? Is he doing all right, or I mean, if you want to talk about it, obviously. If you don't, I respect that. Sorry to hear that, Brown. Getting old, dude. I don't know if you watched Interstellar, but I rewatched it yesterday, literally. It's such a heavy movie because the whole story is behind time, written behind time, and it's just like I don't know, makes me kind of emotional because Time is the only inevitable thing in this fucking life. Kind of makes me depressed a little bit, but whatever. It's what it is, right? We all go through the same thing and have to go through the same thing. There's no way around. Goes by too quick. I agree. You know what I think, dude? Um, I think time goes faster, or started going faster after COVID. I don't know if this has to do with like vaxes or whatever. But yeah, I feel you, man. I feel you. But like, what hits me the most is like I've s- that I've spent like 6 years of my life far, far away from my loved ones. You know what I'm saying? And I missed um, what they've gone through. I wasn't there for them. You know what I'm saying? So whenever I have like a video call with them or FaceTime with them, it just makes me realize that how much I missed of their lives. Because at the end of the day, they get old, right? And you see that visually. It's not the best feeling. But hey, they're coming next week, so I'm kind of happy and excited. I'm gonna get to see my parents after fucking 6 years. They'll be here not this week, but the next week. Yep, that's the hardest part. You can never get the time back. That's the hardest part, and that's the reality of it all. And that's the part that gets me the most. You know what I'm saying? Do they call you? Yeah, we get to talk not a lot though, because of the time zone. It's usually so when I'm sleeping, they're awake, and they're sleeping, I'm awake, kind of type, kind of thing. But you know, try to talk at least once a week. All right, so I'm gonna take a screenshot of this real quick so I can. Oh shit! You know what? Fuck this. I'm gonna start alerting my entries as well while I'm live streaming because I'm aware that a lot of people can't tune in with the streaming because of their jobs or whatever the case is, but I don't want them to left behind. Okay, I'll get back to chat. The older you get, the faster time goes by. It's weird. You know what? When I was a kid, I used to think the other way around, but you are absolutely right.